PM Tun Dr Mahathir Mohamad says the federal government will be forgiving 3.8 billion ringgit worth of loans related to rural area water supply projects owned by state governments. He was speaking to the press after chairing the annual National Finance Council meeting with all the state's chief ministers. Going forward, Mahathir explains that rural water supply projects will not be funded via loans from the federal government, but instead be funded in the form of grants from the Rural Development Ministry. The PM also reiterated Putrajaya's commitment to share half of the tourism tax collected from the respective states to the state governments, which will then be used to improve tourism facilities as well as market and promote tourism destinations. Bumi Armada saw an almost 30% jump in net profit for the first quarter of FY19 to 62.2 million ringgit from 48.4 million ringgit. The better numbers were the result of higher allowance for impairment losses of receivables. Also helping was lower depreciation as a result of impairment losses recognized on the Armada Kraken FPSO and certain offshore support vessels. However, quarterly revenue was 18.1% lower at 491.6 million ringgit, mainly due to the completion of the Lukoil project in the Caspian Sea. As for Outlook, CEO Gary Christensen says the group is looking to stabilize its financial performance through various efficiency and performance improvements initiatives. He adds that the focus will be on improving its performance on Armada Kraken, selectively pursuing new FPO projects, and strengthening Bumi Armada's balance sheet. The positive results sparked interest in the counter, making Bumi Armada shares the most actively traded on the bourse. The stock closed 5.4% up at 19.5 cents with 103.75 million shares traded. RHB Bank's first quarter of FY19 net profit rose 6.7% to 630.2 million ringgit due to lower than expected credit losses and operating expenses. Revenue for the quarter rose 7.1% to 3.35 billion ringgit. RHB explains that competition for deposits remains keen, which resulted in net fund-based income decreasing by 2.2% to 1.21 billion ringgit with lower net interest margin of 2.16% compared with 2.28% last year. Going forward, Group MD Datuk Khairu Saleh Ramli says, while the results have been encouraging, the bank remains cautious given the challenging operating environment as the global economy slows and trade tensions continue to simmer. RHB is expecting its banking sector loans to grow by mid-single digit, supported by the consumer and business segments. Thr Plantations reported its third consecutive quarter of loss as better production was hampered by weak selling prices. For the first quarter of FY19, the company registered a net loss of 8.09 million ringgit, while revenue fell 5% to 115.3 million ringgit from 121.2 million ringgit last year. On top of the lower selling prices for CPO, palm kernel, and fresh fruit bunches, Thr Plantations had also booked in the quarter a higher amortization charge. Finance costs were also higher due to the adoption of Malaysian financing reporting standards. Thr Plantations saw its FFB production increase by 12% during the quarter. CEO Bumi Mohamad says that at an operational level, the group performed better compared with the same period last year. He adds that Thr Plantations' rationalization exercise is on course and anticipates a better production in FY19 compared with FY18. But he warns that its performance will be dependent on the movements of palm product prices and that weak prices would most likely hamper its recovery. Affin Hwang Investment Bank says the RM2.33 per share offer to take Yili Corp private is not fair but reasonable. In an advice circular, the bank says that despite the offer price representing a premium to Yili's historical market price, it was 32%, 41% discount to the estimated fair value of Yili shares of between RM3.42 and RM3.93. However, Affin says the offer is reasonable given that Yili shares have been thinly traded over the past 12 months. It also added the offer presents an opportunity for shareholders to realize their investment in the edible oil trader. To recap, in late April, Yili's founder Datuk Lim Aheng alias Lim Kok Cheong, along with other family members, announced their intention to take the company private.